Welcome to What's Moving Your Money with Spencer Hakimian. We are going to be talking all things tariffs, specifically the imposition of 50% tariffs on Brazil and another 50% tariffs on copper. So stay tuned because we have a very busy episode ahead, and let's get into it. So last week, President Trump announced 50% tariffs on Brazil. Now, he cited political reasons, no economic reasons, as according to his True Social post for implementing these tariffs. And this is evident also by the fact that we have a trade surplus, not even a trade deficit with Brazil. So there really wouldn't be any logical economic reason to be tariffing a country like this. He cited unfair political treatment of Brazil's former leader, Jair Bolsonaro, who is a good friend of his. Now, without getting into the merits of whether that is a good idea or a bad idea, I'm sure most of you can pretty much tell where I stand. Let's stick to how important Brazil is to the global economy, because as Americans, we might not always think about how important countries in South America and the Southern Hemisphere are, but Brazil is huge. Brazil is the largest exporter in the world of many critical raw components of what goes on in our daily lives. Beef, sugar, iron, soybeans, oranges, coffee, the staples of our diet, the staples of what goes into building things with iron. A lot of these things come from Brazil. If we are putting a 50% tariff on Brazilian imports, and assuming no other country, as an example, China will not follow us by putting also imports, we are going to massively disadvantage ourselves, our companies, our businesses, our consumers as they compete in a global economy for offers, for jobs, for contracts, for products, for whatever it is, you name it. Brazil is one of the building blocks of everything that goes into our world economy. And we are only harming ourselves by putting on a tariff like this. Now, markets barely moved at all on this Brazilian news. My personal opinion is that the acronym TACO, Trump always chickens out, is fully priced into asset markets at this point in time, right? It's essentially become consensus that Trump does not mean anything as it relates to tariffs, and he's simply using it for rather peculiar reasons, like to stop a political investigation into his friend, to get rather small concessions on really small and opaque stuff from some countries, which has barely even materialized that in and of itself. But nonetheless, we have to go on the assumption that some of these will actually go into place. If they don't go into place, fine, no problem. We'll be happy. But if they do go into place, we have to be ready for these consequences, because markets, you cannot be late to something bad happening. You have to be ahead of it, right? In our line of work, a 50% fall in asset prices takes 100% rise in asset prices just to recover back to par. So my strategy as a hedge fund manager is really focusing on downside mitigation. I'm very focused on what can go wrong, because in our business, the upside kind of just takes care of itself. Our job is to spot the downside ahead of time and avoid it before it happens. So we have to consider what can go wrong with these Brazilian tariffs. Now, I want to add on another layer onto this puzzle. We, at the same time, got an announcement from President Trump for 50% copper tariffs, raw copper, not refined copper, not copper that's ready to be used in a home, in an electric vehicle, in a smartphone. I'm talking about raw copper that comes from the mines of Chile and Peru for the most part in this world, and some of it from Canada. Now, this is an insane idea for a totally other reason, and this is an insane idea because you cannot change where the copper on this earth is, where the mines on this planet, just because of nature and where, they were placed at the beginning of time, where they are. We cannot change that, right? Copper mines are in Chile and they're in Peru. You can put a 10,000% tariff on Chile and Peru's copper mines. It's not going to magically transport those mines to Minnesota, as an example, or to Nebraska or to Kansas. Those mines are there, right? So this is a really unintelligent idea from my perspective, because first of all, you cannot change it, right? You cannot onshore copper. Copper is where it is already, right? And beyond that, copper, on top of all these pressures we're putting on with these Brazilian tariffs, is a building block of almost everything that happens in a modern economy. If you've ever built a home, if you've ever renovated a home, you know this firsthand. All the electrical wiring that goes into a home, it has to be copper wiring, because copper is the most conducive metal towards electricity flow. So smartphones, chips, televisions, electric cars, airplanes, all of these things require massive amounts of copper. As an example, if we wanted to do something like in the future, like a big infrastructure project, it requires millions of tons of copper, right? And needless to say, this is obvious, but the United States does not consume all of its copper domestically, right? It relies on massive amounts of imports. We just do not produce enough copper as a country. We have to import it. So again, this might not come to fruition. I hope it doesn't come to fruition, but again, we have to be prepared in the event that it does. Now, something with copper that we have to pay attention to is copper is similar to natural gas in the sense that, yes, it is a global commodity, but there are regional prices for it. So just like in natural gas, how there's Henry Hub, how there's Middle Eastern prices, how there's Russian prices, how's European prices, it's the same exact way with copper. So when we look at New York copper prices after Trump's announcement of tariffs, they shot up 30% in about half an hour. 30%. At the same time, the price on the LME, which is the London Copper Exchange, which is the benchmark essentially for Europe and Asia for the rest of the world, it stayed flat. So the market is essentially pricing American copper got 30% more expensive relative to the rest of the world in a blink over one announcement on Truth Social. Now, look, if the idea of all these tariffs is to onshore manufacturing, to onshore production, to make America a manufacturing hub once again, why are we making copper, iron, steel, electricity? Why are we making all these things more expensive? How can a factory in America compete if it's Brazilian input costs, if it's copper input costs, if it's steel and aluminum input costs, if it's Canadian commodity input costs are rising, while at the same time China's prices are all falling? There's going to come a point where, that iron smelter in Brazil, in Sao Paulo, is going to say, forget this factory in Pittsburgh. Why am I bothering with it? Let me just send this to Shanghai. Why am I bothering with this erratic policy that I have to check Truth Social at 4 a.m. every day? Right? So my main takeaway from this is, even if this does not materialize, even if Trump tacos at the end, as they say, what is the point of this? What are we gaining? What are we gaining from doing stuff that is so just simply unintelligent? There's no rational way to defend this. Me personally, I'm not a Democrat. I'm not a Republican. I'm an independent for all intents and purposes. I don't think either party really solves the big things that I focus on as an American, specifically with markets, with the economy, with our national debt, with enhancing real wage growth, etc. and etc. What is there to defend about an idea like this? There are some things about Trump's tariffs policy that I absolutely agree with. I absolutely agree that on certain critical production stuff, like as an example, advanced semiconductors, it probably is logical to place an unreasonable tariff on China such that the companies like Nvidia, Intel, Broadcom do not offshore that, because that is critical. But for something as basic and as fungible as iron or soybeans or copper, we are just hurting ourselves. We are not benefiting from this in any way whatsoever. So look, earnings season is coming up. We have to take a good look at earnings. Equities are at all-time high again. And this is actually, strangely enough, it worries me, right? Because what made Trump back in April, on April 9th, 1 week after Liberation Day, back off and announce the 90-day pause. What made him announce that? It was that the equity market had fallen 20% in a span of 3 or 4 trading days. The bond yield was spinning out of control. The dollar was falling, right? And because he canceled all of those, because he put them all on pause, markets were able to recover, right? But this time around, because it's become consensus that he will chicken out on all of these things, markets are not trading down. If markets do not trade down, what is to say President Trump does not go through with all of these tariffs, right? And if he does, we're gonna trade down because these things are negative to the economy if they go through. If they don't go through to the economy, we'll just end up in the same spot. That, to me, that's dumb because I don't know what you gained from it, but we'll end up back in the same spot. But if they do go through, we're in trouble. We're in a lot of trouble. So we have to stay vigilant. We have to look at this. And please tune in for tomorrow's episode because I'm going to talk about something that is very fascinating that I'm seeing as it relates to consumer spending and some slowing trends that are alarming that do not have to do with tariffs or anything. This just has to do with the natural organic economic cycle, and it's very important and it's not being spoken about. So thank you for watching today's episode, and I hope to see you guys tomorrow.